Bothra, as well as Rajesh Agarwal, who is the head of research at AUM Capital. Good morning to the both of you, especially you, Rajesh, since this is the first time that I'm talking to you today. I want to start, Kunal, with a question for you. Rajan has got a question on Bank of Baroda. For a short-term view, would you accumulate this at the current market price, or is a correction expected from this point?
I think if the question is restricted towards Bank of Baroda, then I believe at current levels you can look to accumulate. The stock is on the verge of a breakout, in fact. So rather than looking at it that whether the stock is topping out, I think you can probably look at it in the manner that the stock is on the verge of a breakout. This could be a cup and handle breakout for Bank of Baroda, which could be almost a 35 to 40 point breakout for the stock. So it seems to be a good bet at current levels. But then, of course, I think when you're looking at safety and more durability in a sector like PSU banking, then I believe SBI stands out to be one of the stronger and the sturdier performer in that sense. So you have to pick and choose. If it's related to Bank of Baroda, then you can look at a buy at current levels and look out for at least a 35 to 40 point target, given that massive 2-year, 3-year pattern breakout could happen to the stock price. But if it's related to safety, then I believe SBI could be a much better bet.
All right, so that's the view on BOB. Kunal does believe that SBI, though, is perhaps you could term it as a less volatile stock compared to a Bank of Baroda. Okay, let's take on board our next question. It's coming in from Santi Chidala. He says, is it a good time to invest into LT Foods and KRBL? Which one of the two offers good risk reward for fresh investment for the medium to the long term? Okay, Rajesh, I'll take it across to you then. Both rice making companies, a good chunk of exports really for both of these companies, especially to countries like Iran, etc. Now we have talks that perhaps the sanctions on Iran as well will be lifted, which would perhaps make trade as well with that big Indian rice consuming country easier. Rajesh, what do you think of LT Foods and KRBL? Do you think that it offers a good risk-reward opportunity at these current levels for the medium to the long term?
Good morning, Alex. Good morning, Sharon. You said it right. With the lifting of sanctions between US and Iran, there are quite hopes that the business terms with Iran will improve, exports will have a booster. And the major beneficiaries would be rice producing in companies like KRBL or LT Foods or rice. And out of these two, if I have to select, I would go with LT Foods because of its strong brand of Dawa. And they have a strong market not only in Middle East, but Iran, but they export to other countries also. And the domestic market is also good. They are even trying to move into some ready-made food packets sort of things, and that's going to again boost to the margins because that's a value-added product. So I would say on valuation-wise, if somebody wants to take a bet at this point of time, LT Foods would be a better bet. But of course, if this Iran thing goes up, both of the stocks will start moving up. But LT Foods is in a better position.
Okay, I actually want to, Kunal, expand the question that I just asked you on BOB, because we've got KR Balan, who's got 200 shares of quite a few public sector banks. He's got Union, he's got PNB, he's got Canara and BOB as well as Bank of India. Should he hold on to these, or should he move, like you said, to an SBI, which I think even on the fundamental side, a lot of people are calling for a re-rating?
I think what I can understand and anticipate is that the viewer over here is looking out for more alpha towards his portfolio. So he's not looking out for, so he may be very confident on the view for PSU banks that maybe the PSU banking stocks as a pack overall could outperform and could perform very well over the next 3 months, 6 months or 1 year, depending on the time frame. And I think which is why I sense that the viewer has parked more investments towards the mid cap and the tier 2 PSU banking names. So I think if that's the view, then I believe you can have these names in your portfolio, but then always have a portfolio distribution which is more skewed towards large cap. So you can have a proportion of maybe 60-40, 70-30. That depends on the phase of the market trend, which we are in, or phase of the market trend for that sector per se. But have more bent towards large cap names, because that will give you sturdy and strength, even in tough market times or in volatile market times. So if that's the case, then you can look at investments in such names. But then I believe having SBI as a core stock from the PSU banking could probably help boost your sturdiness of the portfolio as well.
Oh, absolutely. I think SBI has been, to SBI's credit, that's I think a key positive about that stock. Adding some stability. Stocks like these, LNT, etc. They add a semblance of. Bring down the overall volatility of the portfolio. Okay, let's take on board our next question. Kunal, I think you'll have to come in for this one as well. Zafar has got 4,000 shares of Tata Power, so it's quite a chunky figure that he's holding in Tata Power at a price point of 120. Now he wants to know what's the short-term view for this counter. Well, Kunal, we've discussed this quite often in the last couple of days, given the fact that the power sector, after extremely long, has actually been showing a lot of action. Tata Power included, so many corporate announcements as well by this company. So your short-term view, Kunal, on Tata Power, he's bought it at 120.
So it looks attractive. Short-term wise, I believe that the stock is confirming a breakout for itself. So about that 120 mark was a breakout for Tata Power. In fact, 2 days back as well, when the stock had corrected, it bounced off from those sub 120 levels back again to 123, 124, where it's currently trading. But I would just advise that rather than having this as more of a short-term bet, look at this as more of a quarterly bet. So if you can probably expand your time horizon to from say few weeks to maybe another 3 to 6 months, then I believe that the real potential could get unleashed for Tata Power, because now on the quarterly charts is where the stock is forming a breakout, and whenever that phenomena tends to happen, the previous quarter high is at least taken out, and you see a return of at least 10 to 15% higher on the short-term basis as well. So if your time horizon is another 3 to 6 months, then you can expect the stock target to be anywhere closer to 140, 145 range. So that could probably be a potential upside over the next 3 to 6 months for Tata Power.
Okay, I'm going to check, Rajesh, if you have coverage of this. We've got Rohan, who's got, this is Everest Kanto cylinder at levels of 116. The stock is currently trading sub 100. He's wondering if he can hold it for the medium to the long term. Would you recommend that he does?
I mean, fundamentally on this stock to hold for a long term, because the fundamentals are not that supporting, and it has a history long time back when it went all the way up to 4 figures and then fell down to 2 figures, and again it's trying to move up, but the fundamentals are not supporting, the numbers are not that great. It's better to not to enter at all in these kind of stocks, and if at all one should keep a strict stop loss on his positions. At this point of time, I would say one has to book losses.
All right, we've got Vivek, who's asking about a couple of stocks here. Tata Power we've already talked about, but he's got Coal India as well. And I'm coming back to you, Rajesh, on this one. We just saw the earnings yesterday. Did you glean something that can that can suggest that you hold on to this investment? He's not told us his buy price.
See, Alex, it's one of the largest coal mines, I would say, with the largest coal reserves are across the world, and it's trading at a very low valuation because of various reasons attached to PSU companies. But if you look at the valuation, it's very cheap. It's trading at a 4-5 times price to book, 4-5 times earnings, 1 time price to book, or even dividend yield is very good. We have seen the company declaring dividend yesterday. Yes, the bottom line was tagged below what market expected, but the valuations are very cheap. And the way power sector is moving up, I think power sector and steel both are moving up. I think going forward, the volumes are going to go up because of the increased demand. So yes, one should not only hold on to the stock. If somebody wants to add, he can add also.
All right. Well, let's take on board our next question from Sagar. He wants a fundamental and a technical view on Jubilant FoodWorks. And look at the investment he's made in this one. 12,000 shares at 1,250 rupees per share. That makes his investment, well, worth more than 1 crore. So, I mean, quite a large sum being put into Jubilant FoodWorks. Now, he further says that valuations are pretty high, but he wants to know if the growth will continue in this stock. So, okay, 1 crore rupees in Jubilant FoodWorks at 1250 rupees as the QSR space starts to reopen, as unlocking starts. Let's get in your view, Rajesh. What's your view on Jubilant FoodWorks? I mean, valuations, enough and more has been said about how these stocks are extremely expensive. The consumption names are extremely expensive. You think that there is room for an up move even from here on for these lofty valuations?
Movina, you said it right. If you look at valuation per se on PE basis or price to book value basis, you will find that these stocks are trading at very high valuations. But then there is a fancy for consumption stocks, and in the QSR space, we have very few names that are listed. Pizza Hut is still not listed. Domino's, the brand which Jubilant Food hold is doing very well even in the lockdown period. The home delivery business, the digital business went well. They are closing down some of the loss-making outlets, and they're opening many number of outlets. The expansion plans are very good. They have results, I believe, today or maybe in this week only. We have to wait for the numbers, but still for a longer term time horizon, and since the gentleman is holding from such a long period of time, I would say stay put with the stock. Maybe 20% upside from the current market price is quite possible in the next 2 quarters.
I think one of these days, Sagar, I'm going to have to call you on that coffee that I asked for and ask for a little advice on how you've entered in such lovely prices. We've got a question coming in from Anup, and he's asking about Tata Steel at levels of 1050. What is the short-term view and target? Kunal, this one's for you.
Be bullish on metal names. We just discussed that earlier of the show as well, that how metal stocks are looking very strong. There's a cyclical and a strong breakout. When you see 10 years of breakouts on stocks, they go into not just 1 week or 2 week or 1 month or 2 months of rallies. It results into multi years of uptrend. We've seen very similar patterns for something on the large cap front. Something like Reliance Industries, which broke out of a 10-year consolidation in 2017, and we've seen the stock quadrupling in the last 3 years, 4 years from those 550 odd levels. I would sense that Tata Steel as well could go through a very structural a similar kind of an uptrend over the next 2 to 3 years. So if you've already bought at 1020, 30 odd levels, I would suggest you to hold on to the stock at least for the next 2 to 3 years.
All right. So I'm going to take this liberty then of answering Gautam Mohopatra's next question as well on Kunal's behalf, because Kunal, he's asking you his view on SAIL. You're optimistic on all metal stocks. I would, think that even SAIL is included in that one. But what about Graphite India, Kunal? Because we have a question from Rajendra Gandhi on Graphite India. These graphite stocks as well have slowly started to move up. What do you think of these, which you could call as perhaps ancillary metal stocks?
Metal stocks are looking very attractive, frankly, on charts, Mubina, because if a stock has a tendency to replicate the same behavior time and again, then it tends to do what it did in the history, in the historical charts as well. So now look at Graphite India. I think in 2017, these stocks had a fabulous uptrend from being a stock at 100 rupees. The stock went up to as much as 1100. It corrected also very sharply from those 2018 highs, from 1100 levels back towards 100. But it's again replicating the same behavior, rallying up now from 100 to being a stock which is at 750 or 800 levels, which I think it tested a few weeks back. So it's a stock which is replicating the same behavior, and such kind of stocks have a tendency to try and continue their long-term uptrend. So it could now become more of a stock which should be bought into from a long-term perspective. The only catch with names like Graphite and HEG, which tend to move hand in hand, I think is the high beta nature of these stocks, because they could give you sharp periods of uptrend which could be more than 30, 40, 50% in a short span of time, and the corrections also we tend to be as sharp for them. So if you're okay to digest these kind of volatility, then I believe you can hold on to these names.
Okay, the next question we have is for you, Rajesh, and this is from Anjali. Clariant Chemicals, it is now seeming to be on the move, and she says that she's been watching it for some time. Would you advise a fresh entry based on the fundamentals, though?
it should be bought. This company is into a lot many chemicals like leather chemicals, pigments, and all those things. And despite being a strong company with 51% promoter holding and MNC management, it's trading at a market cap of less than 1,500 odd crores. And if you look at the kind of performance the other chemical stocks have done in the recent past, this stock has underperformed that. And a catch up is going to happen. Yesterday, some corporate announcements were made, and that's going to again add to the re-rating of the stock. And we have a strong buy recommendation on this with maybe 20-25% upside in the very near future. That's 1 quarter or so. So yeah, one should definitely buy this.
Okay, well, let's take on board our next question. This one is coming in on P&G Healthcare. We don't talk about this stock very often. Liquidity as well is a little low on this one. Kunal, this question is coming in on P&G Healthcare, MNC name, and again in the consumption name. It's been a very slow mover, very steady mover. Mukesh Narayan says he's bought 100 shares at 6,300. He wants a 6-month view. Kunal, sell, hold, or add?
So I don't track the stock that often because it's a very low liquid name, so won't be able to offer any comment on it.
Rajesh, if you heard me, if if you have a view on P&G Health.
Which company you are talking about?
P&G Health. Okay, all right. Well, you know what? Then I think we'll just move on to our next question. It's coming in from Sangeeta. Sangeeta J asks that she is holding IndiaBulls Housing 400 shares at an average price of 416. She wants to know if it can reach her buy price in the near term. Again, Kunal, a stock that we've seen a lot of traction in recently in the last couple of weeks. I think it's crossed the 300 mark if I'm not mistaken. Do you think it can, cross the 400 rupee mark?
I believe that the stock potential is extremely strong. In fact, yesterday itself, the stock had given a big breakout above that 300 level, and this is a huge breakout because it's formed a classical triangular pattern on the weekly, monthly charts. The indicators on the monthly charts apparently for IndiaBulls Housing has given a leading breakout, and typically at least on the historical charts, whenever indicators like RSI for example gives a leading kind of a breakout, it results into a much more fiercer and a stronger uptrend for stock price pattern. So I believe in that aspect it looks very attractive for the next 6 months to 12 months apparently for a stock like IndiaBulls Housing. What I would advise also is that rather than waiting for the stock to come back to your cost price, I think what we should actively do is look out for actively averaging the stock at lower levels. So I think now the short-term support for the stock is around 280 to 85 zone. So if the stock happens to come back to that kind of a territory, look to average out further. That will help you reduce your cost price and get you back into break even as well as in good profits over the next possibly over the next 9 months to 12 months.
All right, I'm coming back to you, Kunal, on this next one, and this is on MCX. We've got a question coming in on the short-term aspects of it. I seem to have lost the query in the middle of all of these queries that we've gotten, but what according to you are the short-term targets for MCX?
Better trade for MCX would be let the stock break out of that 1650 hurdle. That's been a bigger resistance point, more of a pain point for a stock like MCX. In last 5 months from February somewhere, the stock had 3 attempts towards breaking out of that 1650 mark. But on all of those 3 attempts, So one was, I think, in the middle of March. The other was in the month of May, and the previous one was just very recently. I think approximately a week back for the stock, and all of those three attempts were sold into, which means that this is now becoming a big resistance point for MCX. Ideally, when you're looking to buy from a short term, wait for the stock to give you a breakout and break past about this multiple resistance zone. So I would suggest that if you're looking to buy MCX, the trade has to be initiated above the 1650 level. Beyond that, I believe you can look at least 150 to 180 points upside from those 1650 breakout levels.
All right. Well, that was, of course, a view on MCX. Swaminathan Sundaresan had this question on MCX, and I hope Kunal's been able to answer it. Okay, we have another question from Vijay Lele. He asks, will this be a good time to enter Zensa Technology in view of yesterday's sell-off? Further, he says, I want to invest in this stock for 5 years. So he has a clearly long-term view. And, further, I think somewhere in our YouTube comments, we did have someone asking for Subex. Many a time Subex was actually classified as a a penny stock really, because it was just barely 9 to 10 rupees. But, with this whole Midcap IT rally, all of these stocks have rallied. Subex is at 50 rupees. So, if our viewers watching, again, I seem to have lost his question. But yeah, Subex, we have another question from Kuldeep Singh on First Source Solutions and Zen. So I'm going to take the liberty of, clubbing these questions together to save on time. And yeah, Rajesh, your view on these mid-cap IT names?
I think have again saw change of fortune, some on the change of hands, like the likes of First Source, which you mentioned. It's a very good company from the RPG, Sanjeev RPG stable, and the numbers have been very good. They have gone on a debt reduction thing. Subex has again shown very good turnaround story. So these two can be very well hold of. Rubina, that time P&G was missed. If you allow, I can answer that also if you require.
Right. I'm actually going to take the next question. I think this is something that is, of an immediate nature. We've got Snehal who's asking about Adani Power. And we know that these stocks have been under pressure, Kunal, but she's bought 50 shares at levels of 160. She's asking if she should hold on or should she sell?
You should sell. You should switch on to something like Tata Power. I think that's a much more stable, much better stock. And the trends for the stock have been far more stronger as compared to its immediate peer. Adani Power, I remember, I think has just recently given a breakout about that 1992 mark, and then from there the stock had rallied more than 50% or 60% beyond that as well. And now I think on yesterday's news flow, these stocks are seeing some bit of volatility. So you might see some bit of trimming off of positions into Adani group of stocks on the back of news flow, and that could probably act as a hindrance to the short-term charts for Adani Power as well. So I would suggest that have a switch and look out for a switch in the same sector to something like Tata Power, or if you're looking at more stable stocks, then even Power Grid as well as nearing a breakout. So these could be two alternatives rather than Adani Power.
Okay, well, I think with that, we'll have to end our Q&A session with our viewers. Don't fret if we've not been able to answer your question. We'll be back tomorrow at the same time, so keep sending them in to us. You can email us as well, and, we can take your questions forward. Before, of course, I let our guests go, it's time to bring on board our high-risk and low-risk ideas. So, Rajesh, let me go across to you first. What do you have for our viewers?
The first one would be Polycab Industries with a target of 2100 odd crores. This is a company which is into FMEG, that's fast moving electronic goods. It exports to around 40 countries. The numbers were very strong when they accept to be debt free in the next 2-3 years. And the kind of demand increase which we are witnessing and we will witness after the unlock thing starts. So this company can outperform, and with a medium-term target of 2100, one can invest into this. The other one would be Gujarat Gas. It's one of the largest gas distributors in Gujarat region, and most of the ceramic industry is into Morbi, and this is the largest supplier and the more in Morbi. Around 65-70% of the revenue comes from Morbi. So that adds to the margins of Gujarat Gas. They have strong export demand. They have the potential to go debt free. Everything is in favor of this. The gas demand is going up just because of because of Morbi factor. Hence, we recommend this as a buy with a target of 700 odd rupees.
Okay, Kunal, coming across to you for your high risk and low risk ideas.
Well, the first stock which I would recommend, Alex, is our low risk trade. It's a buy on ONGC, heading towards a breakout. Multiple resistances around this 126, 127 mark, and the stock seems to have finally, confirmed a breakout. So we need to see that the stock sustains above this level. But if it does, then I believe that the further legs on the upside could open up to almost 140 levels for ONGC. So a substantial upside for a low beta name like ONGC would suggest a buy, with stop loss could be kept at 122 mark. The second one would be more of a high risk trade. It's about Tata Chemicals. A very interesting chart, yet again, because the stock, after a bit of a drubbing, which it received 3 months back from those 800 levels to 670, 675, is now managing to make a comeback for itself. Now heading towards a swing breakout on the hourly charts. And if the swing breakout is successful, then I believe that the stock could be poised for a retest of that 800 plus levels in the near term. So would suggest a buy on Tata Chemicals, 800 as a target. Stop loss could be kept at 725.
All right, on that note, gentlemen, thank you so much for taking the time, for answering the questions that you did answer, and for, well, all of the insight that you provided, not just us, but all of our viewers over the course of the last half an hour or so. We're slipping into a short break on this note, but we'll be back with more, so do stay tuned.